Thank you, everybody, for joining us for this really important and critical webinar on federal COVID-19 programs, and it's bringing clarity for the Ontario businesses. I'm really fortunate, and we are really fortunate to be joined with Baker Tilly today. Baker Tilly is a Canada cooperative, and they're Canada's largest associations of chartered professional accountants in Canada. And both Jesse and Laura have done an incredible amount of work getting all of this content together, adjusting to all of the changes happening, and continuing to make sure that we are providing you today with the most up-to-date information. So thank you both, Jesse and Laura, for doing that with us today. So just a bit here about Laura. So Laura leads a team of specialists and acts as a business advisor to help clients navigate the advisory services available to them. And Jesse is specialized in corporate reorganizations, estate and succession planning, and owner remuneration planning. And just before we launch in, I want to let everybody know that we are actually having a follow-up webinar, not on this topic, but with another Baker Tilly partner, Scott Sonley, and we're going to be talking about the cash flow management in a crisis like this. That will be happening in 2 weeks' time, so you'll get follow-up material about that. But without further ado, I'd love to hand it over to Laura and Jesse to take us away. And again, we'll be dropping off our camera as we start presenting and coming back in for Q&A. Take it away.
All right, I think I'm going to start off with just a brief little disclaimer. As everybody is probably aware, the changes are coming every single day. Even this morning, we had a couple changes that we've put into the slides. So we're doing our best to stay 100% up to speed. But again, the changes could come while we're talking. So take that with a grain of salt, but we're trying to make it as up to date as possible. So it's our little disclaimer. So these are the different things that we're going to go through.
Jesse, I'm just going to, okay, some people are having audio, some are not having audio. Okay, sorry, I just don't want to overstep you starting here. So for those who can, I mean, obviously if some people can, okay, some people do have audio.
I think it's a mix.
All right, so... yeah, I can hear, but not from him. Okay, so they have audio too. So I'm just trying to, everybody has different variations of the audio here. So audio cuts in and out. Okay, so Jesse, continue on. And what I will do is look up the phone number for everybody so that those who are not able to hear can call in. Okay?
Excellent. All right, so here's a little summary of kind of what we're going to talk about. We're going to start off with the support for businesses through the various subsidies that come out and the work sharing program, and then the CERB, which is for employees, self-employed people, and Laura and I are going to split that up. There's also going to be the discussion about the financing programs that are available, and then a brief, if we can get to the time. I don't think we're going to have time, depending on the number of questions, but we're expecting not to. But the tax deadlines and the payment deferrals, they'll be in the material that will be sent out, I'm assuming, at the end of everything. If we don't get to cover that, it'll be out there for you to read. I'm going to get right into it so we don't waste any time. So we're going to start with the Canada Emergency Wage Subsidy. This is probably the most hot topic right now because it's so recent, and really the legislation's not even out yet. So we're doing this based on comments from the Prime Minister and Morneau and different various finance releases. So we're going to talk about here, and then I'm just going to go through and start talking about each one. Eligible employers for the CEWS, I'm going to call it for today. I don't know if that's the right pronounce, but that's what I'm going to call it. So for businesses of any size. So this is kind of open to pretty much everybody except for public bodies, which would be your municipalities, your schools, your local governments, and hospitals. So NPOs, charities, and partnerships, again, that's only if the partners of the partnership are one of the other eligible employers. There is limitations, and the limitation really comes down to revenue and a drop in revenue. And the government released yesterday changes. Originally, it was the 30% compared to last year. Now for March, the period's going to be 15% drop in revenue year over year. And your claiming period would be anytime from now until April 11th, but the program's not open and available yet to actually make a claim. So we'll have to wait for the government to open it up. You have two options essentially for your comparison for revenue. For March 2020, you can compare to March 2019, or you can compare to the average of January and February of 2020, which is a lot of people wanted, because for new startups or for people who just have had exponential growth over the last year, this kind of lets them also participate in the program. And then for April, it's either April 2020 or April 2019. For January and February, if you choose to use the average for January and February for March or April or one of them, you have to stick with it throughout the whole time. So you can't go flipping flopping. So you may want to look at March, April, and May earnings for last year and compare that to the average from January and February 2020 to make sure that you're not meeting it for March and then you don't get it for April and May. So that would be.
I'm just, because there's a lot of people saying they cannot hear right now, and I just want to, and so they can hear me. So I'm going to move you to being an attendee, and then I'm going to move you back to being a presenter and just see if this fixes things for us. Okay, hold on a sec here. Okay. So Jesse, you should be back with us now.
Can you hear me?
Yes. Can everybody else hear everything?
Test.
Okay, good, Jesse. Yes, you're good to go. Okay.
All right. So really just in summary, for this slide, you're going to compare your revenues to prior year of the same period or January and February of 2020 and use the average of those 2 months. Once you pick one, you have to stick with it. You can't go back and forth. And yesterday, the government announced that the 15% drop is for March and then 30% for April and June, or May, sorry. Employers are going to have to attest to this fact, and you got to maintain your documentation to support it. So what is the eligible employees? They've also highlighted what this is going to be, and they've changed this. Originally, it was you could not claim it for an employee who has claimed the CERB, which we'll talk about later, but now it's will be limited to employees that have not been without remuneration for more than 14 days in the periods that you're asking for. This is just a slight change, but again, it's if your employees have always been employed, then you're going to be okay. The next. So you're calculating your revenues. When you're calculating your revenues, you're going to do it based on business carried on in Canada, and it only counts for revenue from arm's length sources. So if you have related companies or associated companies that you've got payments going through, you exclude those amounts. Originally, they said normal accounting methods that you chose all the time. Yesterday, they announced that you now have the option to choose accrual or cash method. But once you choose one, you got to stick with it. You can't go back and forth. So again, look at all 3 months, not just one at a time. And then the NPO charities have the option to either include or exclude the government funding in their calculations. What's excluded from the revenue would be extraordinary items or amounts on account of capital, so capital gain on an asset sold last year. And the wage subsidy itself is not included. So the actual amount of the subsidy it's kind of looks like a complicated calculation, but really it's the greater of A and B. A is 75% of the amount that was paid, up to a maximum of $847. And the lesser of either the amount paid or the 75% of the pre-crisis work weekly remuneration. So what this means is that you could be paying them less than 75% of their pre-crisis remuneration, but at the end of the day, you might end up getting the full benefit for the pay. An employee, there's a special rule for non-arm's length employees. Obviously you can't just start increasing. They've tried to stop people from just increasing related party wages after this to take advantage of the subsidy. So it's limited to 75% of your pre-crisis weekly remuneration. Again, there's no draft legislation out right now or final legislation. But obviously the questions have come to me about whether or not they had to be paid weekly. And my answer would be probably not. It's going to be based on a 52-week year, and you would pay them limited to that amount. So our example, if you're paying $250 a week before, your benefit's going to be limited to $187. Next slide. I don't know if it's lagging for everybody else.
Yeah, and we can actually answer a question here at this point. So Wesley asked, do you have to pay the additional 25%, or can you reduce employees' salary if you cannot afford it and want to keep
it? I'll get to that in a minute, and we'll cover that on a slide in a couple seconds. So the pre-crisis remuneration, like I said, it's going to be defined once we get some more legislation on this, but I'm guessing they're going to kind of use an average for the year, not what you paid actually the week before the crisis happened. The subsidy will be eligible for new employees. You just don't have the comparison to the pre-crisis wage summary. So it's always going to be 75% up to the limit of $847. And there's also no limit. So the other wage subsidy that we're going to talk about in a second is much smaller, and there's an actual cap on it. For this one, there's actually no limit overall. So if you have 100 employees and you're paying $847, you can get $84,000 a week as the wage subsidy. Employers, so this is the answer to the question really, is the government has said they don't have to pay the additional 25%. But they are trying to encourage employers to pay it if they can feasibly do it. So presumably if they're getting the credit, hopefully they're being able to get some financing, which again, we'll talk about in a couple slides, to support paying these salaries when there's no revenue, maybe not very much revenue coming in. So the answer is no, you don't necessarily have to, but they would like you to. Another thing announced yesterday by the government was that they're also going to introduce 100% refund for certain employer paid contributions. For Ontario, that's mostly just your EI and your CPP. So that's your employer portion of those payments. You're going to pay them. And then when you do your submission for your credit or your subsidy, you'll add those on to the subsidy amount for how much for the wage calculation. There's no limit on that, but it's going to be limited based on the calculation of your CPP and EI. And this really only relates to employees that are on paid leave and they're not working at all. So if the employees are coming in for a few hours a week or anything, from what it looks like, again, no legislation, you won't get the credit. But if they're at home and you're just paying them to sit at home, then you would get a full credit for your EI and your CPP on the full amount. Next slide. Sorry. So how do you apply? So the government has announced that there's going to be two ways to apply, is the way I've read it. It's either going to be through your My Business account or through a web application, which is not ready yet, and they're saying 3 to 6 weeks until the application is actually ready to be done and used. My suggestion, again, the pro tip, you got to make sure you have your direct deposit set up for your business, so that way you get your money as fast as you can. If it's anything like the CERB, it should be within 3 business days. Whereas if you take a check, it's going to be more like probably 10 business days, depending on the mailing system. There's going to be more details coming through, but that's what we have for now. If you don't have a My Business account, my suggestion would be to register as soon as you can, because I think if you don't have to rely on this new web-based application being done in the next 3 to 6 weeks, I would choose that one. And the My Business account is just a good thing to have afterwards as well. So making sure you're in compliance with it. So again, the government has been very blunt in saying, like, people better qualify if they are claiming this credit. So you want to make sure you document your decrease in revenue, and whether or not that's on a cash basis or accrual basis, you got to make sure you document that you've done this both every single month. You've chose the same option and the comparison period. There's also discussion in Morneau's announcement that he said you're going to designate a person. I can't find anything in Finance's release on this. And Morneau also said that there'll be significant penalties up to 225% of the subsidy and up to 5 years in prison. So if you're manipulating your revenues to fall into these subsidies, I would just be very cautious. I will say that the Ministry of Finance release on their website says it'll be a 25% penalty and the repayment of the subsidy. So that would be 125 to me. So the other 100%, it could come as a result of another penalty released after the fact, but that's still to be determined. We'll know more once the legislation comes out. And there's other, like, interaction with the CEWS and the other wage subsidies and the benefits that we're going to talk about next. Employers can be eligible for both the temporary business wage subsidy, which is the 10%, I'm going to talk about in a sec. And our suggestion is to just, if you're it's more, it's a smaller credit, but you actually have more people eligible for it if you're a CCPC, and we'll go on to that. But anyways, you claim the 10%, and if you received anything, you would just reduce your claim for the CEWS subsidy when you make your submission. The Canadian Emergency Response Benefit, if you don't qualify for the CEWS, you can still lay off employees and they would receive the CERB, which again we'll talk about in the future slides. And then the last one is the work sharing program. They announced yesterday, I believe, that for employers and employees that are participating in the work sharing program, which again we'll talk about in a minute, the EI benefits received by those employees through this program will reduce the benefit that the employer is entitled to receive. So you've got to be careful if you're using both of these. Make sure you're not double dipping, is what they're asking. And in the government assistance, so it relates to corporations or companies that are receiving other federal credits. The most prevalent one would be the SR&ED. Any government assistance you receive for wages that are eligible for SR&ED, you need to reduce those wages by this subsidy you're getting, which will reduce your SR&ED claim. The other one would be the apprenticeship tax credit is the other one that comes to my mind. And the wage subsidy itself is taxable, but really it's just offsetting the payroll expense anyway, so it's going to be a net. So there's a few things. The revenue test, so the option did come out yesterday, so this was in our slide, but there is going to be more guidance, I'm sure, coming through in terms of that. For MPOs, you get to choose between the revenue test, and again, we're guessing more guidance is going to come out when the legislation comes. There is nothing still, from what we can tell, about the dividends for the only remuneration. If you only were receiving dividends, you're not going to have the payroll account probably for the $50,000 credit, or in order to claim the 75%. So we're suggesting you would just apply for the CERB instead. And again, sole proprietors with no employees, you're going to have to go with CERB. I know I've been asked a couple times now too, subcontractors, they're not employees because they're not going to be reported on a T4, so their wages wouldn't count. And again, some of the stuff is just based off of announcements, and we don't have draft legislation yet. The next one, temporary wage subsidy. This one's been out for a while, so I'm going to go quickly over this as it's much smaller. But you might be able to get into this one if you can't get into the CEWS. So this is for individuals, CCPCs, and partnerships who are one of the other, and MPOs and charities. So charities and MPOs, again, same thing with any individual. It's 10% of your amount. For CCPCs, what they did announce is that the CCPCs must have a small business deduction limit greater than nil for the last taxation year that ended before the eligible period. So what that means is if you've got associated group and you're a bunch of CCPCs, you have to ask your accountant or watch out to make sure that at least $1 of small business deduction has been allocated to the employer in question. Otherwise, you wouldn't. From what we're reading, you're not going to qualify. So if you haven't filed your last tax return yet, I would suggest making sure that gets changed and done. If you have, you can talk to your accountant about what options you have. The amount of subsidy. So it's 10% of the remuneration paid from March 18th, 2020 to June 19th. This is 10% of what's paid, not what was earned. So the first payroll, I think that's going to be coming through on April 15th for March. That would be eligible. You're limited to 1,375 person and a maximum of $25,000 for the employer. One thing that we didn't expect was the associated CCPCs don't have to share the maximum. So if you have an associated group with employees in each one, you'll be able to get the subsidy for each credit or for each company. Again, like I said before, just continue to calculate it, even if you're eligible for the CEWS, because if for some reason you don't end up being at the end of the month, you can still get this and you just reduce your CEWS subsidy. Again, calculating it, it's 10%. And when you do your payroll, so it's 10% of what you paid your employees, subject to the limitations. And what you do is reduce your actual remittance that you're paying to the government, but you can only reduce your federal income tax or your provincial income tax on the amounts paid. So you can't reduce your CPP and your EI requirements. It's just the tax requirements. So if you don't have a full submission for income tax, you can carry the credits forward for periods even after this June 19th date to claim it afterwards once you do. One question that I know have come up is the employees will still be able to claim the full income tax withheld on their T1 when they do their tax return. One thing you would like to do likely is talk, if you do have a payroll provider, make sure that you've opted in if you're eligible for it, because they need to know. And I'm assuming they've been in contact, but you have to know. Again, books and records, make sure you keep very good records of this to track it. And one thing that Tax Templates has produced a very good schedule, which allows you to calculate what the wage subsidy is. It incorporates the limits, and it has instructional videos even on it as well. Tax Templates does a lot of great schedules, so we suggest downloading that one. And the wage subsidy, again, it's taxable, and again, it's going to reduce your credits. Another suggestion is to just keep a separate GL account so you know how much you actually receive for this, so you don't go over the limits, and you know how to pick it up for when you're doing shred or other applications. And the last thing I think I'm going to talk about is the Canada Summer Jobs Program, which again just came out yesterday. The program's been around forever, but they've actually increased what you can get. So it's for summer work for experience for young people, ages 15 to 30, and they're going to cover 100% up to the provincial minimum wage. Again, there's no legislation on this yet, but I'm assuming that's going to be the student minimum wage, because I know if they're under the age of 18, I believe it is, If they're over, then you're not subject to that amount, but just be careful you're not trying to claim more than whatever the minimum wage is for those students. And the other thing that changed was that they've extended the program to February 28th, 2021. And again, we're expecting a little bit more information, hopefully today or this weekend, on these changes. And that's questions. So
yep, I'll jump in here. So thank you everybody who's asked quite a few questions. I just want to be, cognizant of time as well. It is 11:30 right now, and we are comfortable going beyond the 12 o'clock timeline. Just want to let everybody know that we will get to as many questions as possible. So Jesse, one of the questions that came through here was around seasonal businesses that have not had any sales through the winter, but keeps their staff on during that time. But now the contracts are starting to come in. So they're just starting to see a ramp up in revenue. Will they qualify for that wage subsidy?
Well, in that case, you wouldn't compare your wage, your revenue test to the March or the January and February average. You would compare it to last year. So if you're experiencing a large drop compared to March or April, May of last year, because people can't get out, then you would qualify, provided you meet the other tests. But yeah.
Okay. A second question here, and I think you actually touched on a piece of this later on, but let's just say an organization that has multiple streams of income. In this case, somebody's saying that they've lost their revenue down the silo of childcare, but there's other things, maybe online tutoring or something like that, where they haven't necessarily lost revenue. Will they still have access to the wage subsidy funding for the portion where they have lost the revenue? Or does it have to be inclusive?
Good question. I think we're going to rely on legislation. So I'm assuming if you've got, would be a corporation or maybe even a self-employed person with multiple avenues of multiple businesses. So I think at the end of the day, you would look at the business, but I think we're going to have to rely on just waiting for legislation for that to come out. So we'll release something when we get more.
Yeah, for that piece that you talked about, or the 10% deduction off payroll, was that something that, if the business does have multiple silos, that it can be applied, the $25 max can be applied to the different pieces of the business? Or is that
10% is not subject to a revenue test? So yes, that one would be okay for really anybody that's continuing to employ. Obviously, if you're a CCPC or one of the other eligible employers.
And I'm just going to keep going through some questions. I'm trying to get them somewhat in a stream, but they're all over the map, which is great. Do you have to deduct what we're claiming on the TWSE?
The TWS.
Yeah, I know. I wasn't.
Yeah, I think that question is probably referring to the fact that you can't double up in the program. So if you claim the 10% TWS, you have to deduct that when you apply for the 75% CEWS subsidy.
That's why we suggest to just claim the 10%, and then when you go to do the 75% subsidy, if you qualify for both, then you would just reduce your 75% subsidy by that 10% you already claimed.
Okay, great. And Wanda asked the question here too about this. She does quarterly remittance. So now the first one coming up is April 15th. So she can use that 10% method for the whole quarter, or is it just over a certain period of time?
The way it's been written is for remuneration for the amounts paid to the government. So I would say yes.
Okay. So are businesses able to apply for the CEWS if the employees are not working their regular full-time hours?
Yes, if you're still paying your employees, to some of our clients and businesses are actually still continuing to pay your employees just to sit at home, just so they don't have to go on EI. In that situation, like I said, you would get your CPP and EI covered, it looks like, as well, based on the releases from yesterday. So yes, you would.
Okay, great. So there's a question here about the CERB and about, a business owner having a trailer park where they collect their income over the summer months. But but they generally they take like the 3 owners take a salary from the company, so they don't know if they can open this summer. So would they be looking more at the CERB route?
If you're going to continue, if you're not going to pay the employees, then you wouldn't.
Yeah, it sounds like there's 3 people who kind of run the trailer park together, and they all can't. They're not going to open a trailer park this season, so there won't be any revenue, and obviously then very few employer hours or no revenue coming in. So it sounds like the route would be the CERB.
Well, they would if they can't pay themselves, so they can still continue. They've had to close because of COVID because they're not going to be able to open. So they would again be limited to the 75% of the pre-crisis wages for those for the employers, because assuming they're going to be related or not, they're going to be non-arm's length people.
Kyle, I'll just add to that. So in that case, they could sort of choose between the 2 programs. They could continue on payroll if they're able, and then be eligible for the 75% credit. Or if they're going to, they have no business and they're going to come off payroll, then they can go on the CERB 2,000 a month benefit, which we'll talk about in a few minutes. And we're also going to talk about some financing options that would allow them to bridge the gap if they wanted to stay on payroll and be eligible for the 75% benefit.
Okay, perfect. I'm scrolling through these questions, and for those who cannot hear certain people, if you're on your phones watching, you might have to click on each person's camera to have that come through. And just so everybody knows, the soft copy with the audio video will be available after as well, for those who are not able to be listening right now. So when they're calculating remuneration, is it a before tax or an after tax, like a gross or net revenue conversation?
Gross payroll.
Okay. And do students need to be registered with a federal program for the employer to be eligible for the 100% student subsidy? Again,
So I can answer that, Kyle. They've said that you don't have to. They don't have to be students. So if they're asking if they have to be registered in school, no, it's for youth. They're saying it's just for any youth that meet that requirement of age 15 to 30.
Okay, fantastic, thanks. And there's a question here about people who were just happened to be laid off before all of this started. If they were laid off, will they be excluded until the company brings them back on, or will there be some sort of back pay opportunity?
If we're talking about the CEWS, it's actually employers have to pay them, so they won't get it if they've been off for the 14 days. And I think in order to get the CERB, as Laura's going to talk about, you have to be expected to be off for the 14 days to get that. So that's kind of where they're catching you. So if you're not going to be off for 14 days, employers can't claim the CEWS for that employee.
Okay.
And if you're not off for the 14 days, you don't get the CERB. So,
Natasha, we're going to cover financing later on. If you wait till that time, please ask this question at this point to see if anything else that you picked up throughout this. And just because I'm scrolling through here. I think you guys, I don't want to ask the same questions twice, because the question here again about applying for this the CEWS if employees have reduced hours from 35 down to 16 hours a week. So obviously their wages are down, but can they apply?
Well, the employers are the ones that are going to have the 30% drop in the revenue in order to be able to, so the employees don't apply. And if this is in reference to the CERB, I'll let Laura talk about that when we get to the CERB itself.
Yeah, of course. And maybe a quick question here. So a company that chooses who's been currently using accrual basis accounting but wants to switch to cash basis accounting, they can just make this month over month switch. Do they they're going to have to go back through all their accounting record over the previous 12 months, correct?
Correct.
Yeah.
And this is again just for the subsidy for actually doing your income tax. Yeah, they're not going to let you change to cash basis unless you're a farm, is really the only one that's allowed. So again, this is just for calculating the wage subsidy revenue drop.
This next question too, and there's so many different questions coming in, and there's so many different scenarios. So I apologize, we're not going to be able to get to every single one of these. and I think this is more a conversation of opinion, but it's about, you know, if a dental office laying off most of their staff, and now is the purpose of the Q to kind of bring back the staff and pay them the wage subsidy while they stay at home working, or is that why the CERB is available?
That's what they're trying. I think the government, the purpose behind the Qs is to try and encourage employers to basically fund the EI so that we don't have that many people going on to the CERB. However, if they've, like I'm looking at that question, they've already started receiving the CERB, then if they come back to work, I would say that they're going to have to repay the CERB.
Yeah, repay the CERB, and then they potentially
and getting full pay or even any pay more than, again, 10 hours. We'll talk about it in a minute. You'll have to repay the CERB if you want to get the 75, if the employer wants to get the 75% credit.
Okay. And in regards to the students, do they have to go through the summer student program, or can they hire anybody under that age tomorrow?
I can answer that. So you have to go through the program, and there is an application for that. So that more information about that will be available online.
Okay, thank you. Yeah, and I'm going to keep on. I'm going to keep on keeping on. I'm just going to get to as many as I can here. Linda, that's a great idea around the flow chart to try to follow all of these decisions. They're changing.
Yeah, I can actually respond to that as well. So at the very end of our slides, we do have a link to our additional resources through our Baker Tilly National Network, and there is quite a nice guide. It's not a flow chart, but very handy guide that kind of goes through the eligibility and who can apply, and it's fairly easy to follow. So I would recommend to check that out.
Great.
And it gets updated as well basically every time a release comes through. Our national is pretty good about updating it, and there's no, when an update happens, the old one just gets removed and the new one's put in the same place. So if you're going back to if a release comes out, make sure you go back to the website and download the most recent version. And the date at the top will have the date it was last updated.
And we will jump into the next section here, and Amandeep, it's going to be right up your alley. We're going to now talk about work sharing. So whoever is up to jump in. Thank you, Scott, for sharing the link.
I'm not sure if you can hear me, Kyle, but I've lost all audio, so I can't hear you guys.
Okay, we can hear. I
can hear.
Yeah, I'm just going to let her know we can hear you.
You can hear me?
Yep.
Okay, so I'll just talk then?
Yes.
All right. Okay, so we're going to move on to EI work sharing program enhancements with respect to COVID. So EI work sharing has been around for a number of years, and they've just provided some additional program enhancements to make it easier for employers to employers and employees actually to take advantage of this program while COVID is happening. So we'll go over what it is, how it works, and how to apply. So basically what it is for employers that are experiencing temporary reductions in their demand, you can set up this agreement that will allow the employees to reduce their hours and the employer to pay them for those reduced hours. And then the employees go through the EI program to top up the portion that of the reduced hours that they have. So EI would provide them 55% of their pay for those reduced hours, so for the period of the reduction. During the COVID period, one of the enhancements is that the employer is required to demonstrate only a 10% decrease in sales. So if you don't fit into that other program that Jesse talked about, the 75% wage subsidy, you don't have a 15% drop in sales in March or 30% in April or May, potentially you could fit into this program with just a 10% drop in sales. And it wouldn't apply to seasonal shortages of work and things like that. So for some of those people that had questions about seasonal businesses, may not work in those cases. How does it work? So we kind of talked about that. You get EI top up the employees, and the employer really just gets to reduce what they're paying to the employee based on the reduced hours of work. You create a work sharing unit, so all employees in a work sharing unit would agree to reduce their hours of work by the same percentage. And that can be anywhere from 10 to 60% on average over the course of the agreement. So it doesn't have to be exact week to week, but over the course you have to sort of pick that percentage that you're dropping down to. One thing to note is that owner-managers are not eligible for this program, whereas they are eligible for the other programs that Jesse was speaking about with respect to the 75% wage subsidy and the 10%. So the program enhancements specifically related to COVID are that they're trying to make it easier for employers to apply. So they're extending the duration of the agreement. It used to be 38 weeks all the way to 76 weeks. So that takes us hopefully through this period. They're waiving the mandatory waiting period between agreements. So if you previously were on this program and there's normally a waiting period, that is gone. And they're easing the recovery requirements plan during this period. So I guess consider this program. Our tip would be if you don't meet the eligibility for the other 75% wage subsidy program, because this has a lesser revenue drop test. How to apply? So there is an application form. This program has a bit of a reputation of being a bit difficult in terms of the requirements to apply, but they've tried to make that a little bit easier. So there is an application for the agreement. The employees have to sign an agreement. So it's an agreed shared agreement between employer and employee. And then normally there's a recovery plan required, but they're limiting that to a single line of text in the application form. So they're making that really easy. You don't have to come up with a complicated recovery plan. And those agreements are monitored by Service Canada. Normally this all takes 30 days to get that application process in advance of when you want to start, but they've dropped that to 10 days to make it easier during this COVID period. So we're going to stop there and just cover off any questions with respect to EI Workshare. I can't hear the audio, so I'm going to try and just follow along with questions in the chat.
Yeah.
So just bear with me here. Okay, so David is asking, will the enhanced Workshare program be available after June 6th for businesses coming back online in a less active manner? So I guess you're referring to if you, I'm just clarifying, David, if you're shutting down because of COVID, but then you're coming back online. I think as long as you can demonstrate that you're 10% down from your normal activity, then you would be able to fit into this program. Doug is asking, is it retroactive back to March 15th? No. So the way this program works is you have to apply and you have to be accepted into the program. That's that 10-day waiting period. And then it would start being applicable after you've been approved for the program. Another question, so employees and employer in the same group unit have to make an agreement on reduced hours. So yes, there has to be an agreement amongst a work sharing group to be agreeing on that reduced set of hours, and they have to sign off on that. Another question from Paul, can we utilize CEWS and then still qualify for the Workshare program if the work is still reduced levels in June? So yes, Jesse talked about that briefly in his part of the presentation. There is an interaction rule that just came out yesterday with respect to EI Workshare and CEWS. So they're saying that yes, you can have both programs, but your 75% wage subsidy will be reduced by what the employee is receiving in EI on the Workshare program. So you'll get a reduced benefit from that, but you'll still be able to be in both if you wanted to be in both, if that answers your question. Okay, so what if you're laid off and now on EI, but starting a new business in the same industry, and that industry is experiencing reduced work due to COVID? Trade is construction, residential. That's a good question. I'm wondering maybe.
I think the problem with that is you'd have to have the 10% drop.
So it's hard to tell from the question whether you're an employer or an employee in that particular situation. If you're an employee, we'll talk about CERB and some of the limitations there on whether you can continue to work. If you're an employer, you would be eligible if you meet the other eligibility criteria. Can you do Workshare and 10% programs? So they didn't talk about that interaction, but I would assume it would work the same way as what they've said about the 75% CEWS, which is you can't double up on any program. So you would have to reduce what your what you're claiming. So what the employer is claiming would have to be reduced by what the employee has received in EI on this program. Former employee, and yes, there would be no 10% to compare to though. So this is, so this is a brand new business. I'm not sure that that would work with the EI work share, because you do have to demonstrate that you're down 10%. So that might not be the best program for that particular situation. And that's all the questions I'm seeing. I'm not hearing from Kyle, so I'm going to assume that that's all the questions.
Yeah, you cannot hear me still right now? No? Okay. So yeah, we will move on to the next section.
All right, so I'm going to assume we're okay to move on to the CERB benefit. Great, I'm getting the thumbs up, so that's what we'll do. Okay, so the CERB benefit is the Canada Emergency Response Benefit. That's the one probably everybody's been hearing lots and lots about, because the application was out this week. So people are applying to this, and actually we're hearing that they are getting money. So money is actually flowing on this one, so that's exciting. It's $2,000 a month in benefit for people that are eligible, and we'll talk about that criteria. So it's basically for people who have stopped working due to COVID, people who are sick or quarantined, taking care of someone else who's sick, parents who have to stay home with children due to school or daycare closures, or if you have employment but you're not being paid because your employer maybe has had to close their doors, so they haven't laid you off per se, or they have laid you off. It's either or, really. It's a large program trying to encompass as many people who are out of work as possible. And also, which is a great benefit, is people who are not eligible for EI. So those that are self-employed, contract workers, owners, they are eligible for this program, although they aren't normally eligible for EI. And what they are saying, the change here from yesterday, or actually from earlier this week, was originally they were saying you couldn't have any other income when you're on this program, and now they're relaxing that a bit and saying that perhaps people can work a few hours a week. And this is really for anybody who hasn't been completely out of work but is really down, maybe freelance contract people who are trying to take on a little bit of work, but there just isn't a lot of work out there. And so we're hoping that they're going to move forward with changing the legislation to relax the rules around allowing a little bit of work to happen and still be eligible for the benefit. Who can apply? So as long as you're 15 years old and live in Canada and you've had income of at least $5,000 in 2019 or the 12 months prior to your application. That particular rule has become a bit of a sticking point for some self-employed people or some business owners who have not taken any remuneration from if they're incorporated a corporation in the form of salary or dividends. And so they're looking at that, and there's certainly some talk around that. So I would say if you fit into that category, because I've had that question a lot this week from clients, then please reach out to your MP, your local MP, and let them know that this is an issue for you. Because the government at the moment, the rule is you have to have at least 5,000. If you don't fit into that criteria, then it's not going to work. But if you have a particular situation, you should be pushing your MP on this. You're expected to be without employment for at least 14 consecutive days. So that refers to what Jesse was talking about earlier under the CEWS program. People on this program, you have to be expecting to be off for those 14 days. And then you would get the benefit under this program. And if your employer decided to hire you back, you could go back then after you're outside of that period. Okay, so just a note that if you've already applied for EI after March 18th, you don't have to reapply. They're going to move everybody related to COVID who applied for EI over to CERB. That's how it's going to work. So that would not apply to people that are on EI, for example, that are on mat leave. It's only those that have lost their work due to COVID, and everybody's going to be on the CERB program. And then if you're still out of work after the COVID issue or the COVID period, then they'll move you back to the EI program after that, if you're still eligible. Okay, so the benefit is $2,000 a month. We talked about that. It is taxable. So that's really important for people to realize, because they're actually not taking any deductions at source. So everybody this week who's been applying has been getting a $2,000 benefit into their bank account, and you have to realize that you're going to have to pay tax on that next April when you file your taxes. So just keep that in mind. Like I say, funds have started flowing. We've heard lots of reports of people getting 2 payments, and that's because the period started in mid-March. And so they're paying you for the back pay for March plus April. And so there won't be any more payments now until mid-May. So if you got your $4,000, then you'll have to budget that until mid-May. The program runs till October 3rd, and you have to continue to confirm every 4-week period that you're unemployed. So just going on here. And we've already talked about kind of the EI rule there. So we'll just skip on to the next slide. So how to apply, probably everybody's heard this and seen it lots, but this is the slide if you need to apply. They are doing it based on birth month this week because they didn't want such a high volume to crash the system. We're hearing that, the applications are going in smoothly and people are getting their money within a couple of days. So don't worry about if you're kind of a later birth date, that you'll still get on there. And okay, so we're just going to look at we're going to stop and look at a little scenario before we deal with some questions. So this kind of covers off a few things we've talked about so far. So if you look at a person who's maybe making $48,000 a year, an employee, their monthly salary normally pre-crisis would be $4,000 a month. So they would be taking that home net of tax, of course. If they're laid off due to COVID, they can qualify for the CERB and they get $2,000 a month. So that's about half of what they were normally making, but no deductions. So you have to keep that in mind. And then if you compare that with what they would have gotten on EI, if they were laid off regularly on EI, they'd get about $2,200 a month, which is 55% of their normal salary. And there is a cap there, but the $48,000 person is under the cap. With respect to the program that Jesse talked about earlier, the 75% wage subsidy, the employee would remain on payroll. The employer would qualify for this, assuming they qualify for CEWS, and assuming that they can't top up the other 25% due to financial hardship, closure, maybe the employee's not even working at the moment, but they want to be able to keep that employee on their list of employees and be able to ramp back up when COVID is over. That employee would be paid $3,000 a month under that program so that would be 75% of their normal salary, and the employer would be fully reimbursed in that situation. So I call that the win-win scenario. So that's probably the one that would be best for employers that are looking at perhaps bringing some employees back. Everybody wins on that one, and I think that's really how the government's designed it, is they do want employers to try and bring back employees if at all possible. So we're going to stop there and answer questions on CERB. So again, I can't hear, so I'm going to scroll back through the chat and try and answer as many questions as I can. Okay, so let's see here. And Jesse, if you want to jump in, feel free to. Okay, so employers have to lay off employees for them to be eligible for CERB. So technically, no. The way they've written the rule is, you could be just at home because you're sick, but your employer hasn't even laid you off, or you have to take care of children, same situation. Maybe you're out of vacation and other benefits, and so you can apply for CERB and you don't have to be laid off. If you're an employer listening, I would probably recommend, if you're going to if you really have a shortage of work and you want to put your employees on this CERB program, then you probably should lay them off and issue a proper ROE for shortage of work due to COVID, just to keep everything kind of legal and above board. But no, the employee does not have to be laid off to be able to apply to that. Can university students home for the year apply for CERB if they meet that $5,000 test? So they've had more than $5,000 of income in 2019 or in the past 12 months, then yes, they can. So that's good news for youth, and that was part of what the government wanted to do. Next question is, can staff laid off in January for shortage of work, construction, residential, but would be working now for COVID-19 be switched to CERB? Laid off in January, but would be working now, but for COVID. I see what you're saying. So again, they have to just meet that $5,000 test. So yes, if they, in the past year, like going back to 2019, if they earned $5,000, then yes, they could apply for CERB if they cannot get work in that industry due to COVID.
I think the concern there.
Okay. Oh, I see Jesse's answering some of these, I think, as we go. Sorry. Sorry if I'm duplicating. Okay. So employers looking to add the wage subsidy, is it in the best interest of the employee to wait to bring them back once their current CERB period has ended? Yes, I would get in touch with employees that you want to bring back and figure out what they've been paid for in terms of the CERB periods and try and work that out if you bring them back. The government, I think, it really wants employees to be put back on payroll. That's why they brought out that generous CEWS benefit. So I'm sure if you, employer and employee, both agreed and wanted to be back on CEWS, then you could work that through with the government in terms of when you can come back. If you're on maternity leave for the last year and supposed to return to work, but employer can't take you back, can you get CERB if your 5,000 came from EI? That's a really good question. I don't have the answer to that. That would be, we'll have to work that, and we'll have to get back to you on that one after the presentation. Unless, Jesse, you have an answer to that. Oh, he's nodding.
Yeah,
I can't hear.
If on CERB's website, they have a bunch of frequently asked questions, and one of them is,
how do we confirm every 4 weeks we continue to be unemployed? There's going to be, I assume they'll reach out to you through electronic means for you to go on and confirm that, or they're going to ask you to go on and confirm, similar to how you had to go on at the beginning and apply. So you would go on through your My Account or however you applied. One clarification on work sharing, EI will top up 55% of employees on reduced hours. Does maximum weekly limit applies to full week, or how does that work? So I assume you're asking about the maximum weekly limit under EI. It would be based on the reduced hours. So let's say they are at 50% of their normal pay. It would be 55% of that, whatever they're being paid there, that 50% that they're being paid. Hope that answers your question. If work is not available as a result of reasons related to COVID upon conclusion of your maternity, okay, that's the answer from Jesse. So I'll leave that. How does employer get the 75% back? So there's going to be an application available in 3 to 6 weeks, and it'll be a refund that comes through, and that's why Jesse was recommending to get set up for direct deposit for your business, because they're going to either mail a check or direct deposit you the money, and of course direct deposit would be faster. Okay, so there's a very long question here. Just scrolling here. There's so many areas and questions and misunderstanding. Our company construction shut down in April, has been able to keep 35% of employees, 6 of 17. Majority were done the 3rd or 4th, but some were done end of March. I know I can't hold my workers' hands, but I am concerned as I believe some applied for EI and some applied for CERB. My thought is that the 4-week period was a per person layoff period, and then assumed to be off 14 days wording. If there are errors in these, they would pay back the full amount of the weeks not qualified. I have completed ROE for all. Also, if we have job site deemed essential the next days and call my people back and they did not know this, how do the subsidy receivers cancel or notify? What if we bring them back and they receive money? So that's a good question. Yeah, I think that has to be dealt with. There can't be a doubling up of benefits, so there would have to be a repayment there, likely by the employee, I would guess. We'll have to get back to you on that. Okay, so as a self-employed person, can you apply for CERB even if your work goes up and down, for example, on and off 14 days for quarantine, but then if you go back and then we'll be off again, so there is an on and off component. I think as long as you're off for those 14 consecutive days, then you can apply at those times when you're going to be off due to COVID for the 14 consecutive days. I'm going to stop there because we are at the hour, so I'm going to continue. I want to move on to the next section because I think it's pretty important. So we're going to look at financing programs, and this is to help bridge the gap because a lot of business owners rightfully are commenting that how are they able to pay their employees when this 75% benefit is not available yet and is the money is not flowing. So the financing programs hopefully will help bridge that gap. And the really great news is one of the programs, the Canada Emergency Benefit Act account, or CEBA for short, is actually available today. So I did check that this morning. The applications are available online today. I checked a few of the major banks and the applications are all available there. And they're also available with your credit union as well if you bank with a credit union. So they're asking you to apply through your regular financial institution, although it doesn't stop you from applying to a different bank. They just don't want you to apply obviously to more than one bank. Only do one, and so they're recommending you pick your regular financial institution. You do have to have a payroll account to access this loan, and so your payroll has to be between $50,000 and $1 million. And the great thing about this loan is that it's interest-free and that there's a forgivable portion. So 25% of this $40,000 loan is forgivable if the loan is fully drawn and then repaid by December 31st, 2022. So almost 3 years away. So that's fantastic, and no interest that whole time. And then that converts to a 5% loan if it's not repaid, and there would of course be no grant portion if it's not repaid after December 31st, 2022. So I did take a look at the application form this morning from one of the banks, and I'm assuming they're all the same. You do have to certify that you're going to use this loan for eligible sources. And so what the eligible sources are really your operating costs of your business, your payroll, rent, utilities, insurance, property taxes, and any scheduled debt repayments that you have. You're not really supposed to take this loan out as a business owner to pay yourself dividends, increase your salary, or refinance your other high interest debt. So you just have to be really careful there. And there are a lot of, they're coming out and saying they don't want people to be using these government programs for misusing them for the wrong things. So you have to be careful that you're using it for the right reasons. What they're really wanting people to use this program for, and this is our pro tip, is to cover those operating costs while you're closed or have minimal operations until you can get to the point where that 75% CEWS benefit is available. So this kind of gets you through. So I would recommend if you do have a payroll account and you meet the 50,000 to $1 million in payroll for 2019, that you go ahead and apply for this today. You have to have a valid payroll number, and you have to provide your total payroll from your 2019 T4 summary. So that's it for that one. I'm just going to quickly talk about this one. There wasn't a lot of information available when we did the slides, and I checked again this morning, and still pretty minimal information. So although this program is, I believe, supposed to be available shortly as well. It's a business loan program as well called the Business Credit Availability Program. And this is where the government has basically provided government-backed instruments that BDC and EDC, those banks, will distribute through co-lending programs with your regular financial institution. And it'll help with, again, operating cash flow. And these are bigger amounts. So this is up to $6.25 million through BDC, and then same through EDC. And the financial institutions will conduct the underwriting, and they're going to manage the interface. So you need to reach out to your own normal financial institution to start the application process, which, as far as I understand, are not available yet, but hopefully very, very shortly. And that will help get that underway. Some other measures that you can look at with your bank in terms of helping with cash flow are deferring your principal repayments on loans. So you have to speak to your bank about that and get approval, and possible increases to lines of credit and available other credit products as well. So those are for credit-worthy businesses, and this whole program also is for credit-worthy businesses. So you do have to demonstrate that your business is able to repay the loans. And these are not interest-free loans, these ones. Although the interest rates are actually pretty good. We've been quoted a few interest rates we've heard from clients, and the rates are quite low, of course, because the national rate's been lowered. Okay, so I'll just stop there, see if there's any questions on financing. Okay, someone's got a question. Can you apply for CEBA and CEWS? Yes, that's actually what they want you to do. They want you to get the CEBA account to get you through until you can utilize CEWS, so absolutely. Okay, what other questions here? Over $1 million payroll, you were not applicable. That's right. Yeah, not for that CEBA no interest loan. You would be applicable for the BCAP, Business Credit Availability Program, as long as you're a credit-worthy business. So you'd have to reach out to your bank about that. Okay, so just looking for financing questions specifically. A lot of them are about the over $1 million payroll, so I think we've addressed that. What do you mean by fully drawn for that other loan? So what I mean by that is when you access that loan, it acts as like a revolving line of credit, so you just draw on it as you need it. In order to get the forgivable portion, you would have to have drawn all of it at some point over the period and then repaid it all at some point. So if you, let's say, apply for it, they give you access to this line of credit, but you never use it, then, at that point it wouldn't be drawn and you wouldn't be eligible for the forgivable portion. So hopefully that answers that question. Oh, and Jesse's answering some of these as well. What about for capital upgrades? So for CEBA, I don't believe that would work based on what I'm seeing on the bank's application, but you could check with your financial institution. Probably more the BCAP program would be, you'd need to talk to your bank about that, or potentially other credit products that they have that would work for capital upgrades. What if you take dividends instead of payroll? So if it's just a single owner manager and they're taking dividends instead of payroll, then you would not be eligible for that CEBA account loan, because you need to have a payroll account and it has to be a minimum $50,000. Okay, Jesse's answered a lot of these, so I'm just going to keep scrolling. Do you need to give receipts to show where the $40,000 has gone? I'm not sure on that one, so that would be a question for the bank. What I was seeing this morning on the application is that you just have to certify that you have to attest to the fact that that's what you're using it for. So I'm not sure how they're going to police that on the back end, but there's always a possibility that they could come in and audit, I assume. Okay. Someone's got a question saying, to understand the 75% benefit, if my employees work reduced hours, I can top up their wages to level their salaries to a normal level as long as my revenue is down 10% March and 30% after that. So no, it's 15% in March and 30% after. And after that, I can apply even if their actual salaries are not down 75. Yes, so that's actually what they want you to do. As long as your revenue is down, then the proper amounts, then you can apply for that benefit, and you can keep your employees at 100% if you're still able to pay them that. That would be ideal. Okay, to add to Christine's question, let's say we have money in our account, we could take the loan to use for operating costs instead of using cash. So, I mean, this is where you get kind of, it's a bit of a gray area. They're saying they have money in their account, they would get this loan and use it for operating costs. I think probably what they would say is if you don't need it, maybe don't apply for this yet. Certainly they're trying to help businesses that are, really struggling and perhaps are going to close their doors and perhaps declare bankruptcy. You have that sort of a judgment call, but I would say if you have the money to continue operating, then you maybe don't need this account. If you're down significantly and your cash flow is down, then maybe you need to look at it as an option, or it may be something you need to look at down the road as things kind of progress. If my company is financially sound, or the restrictions to applying to CEBA, not to my knowledge. I think if you're financially sound, you can apply for it. As long as you're using it for those purposes that they've requested. What are the chances that CEWS will not get passed by the government? I think that's highly unlikely, but I think there may be some more changes by the time it is passed, because certainly the opposition is pressing pretty hard to make sure that all situations are covered, because like I mentioned earlier, people that are self-employed but have not taken any money from their business don't qualify for CERB and don't necessarily qualify for CEWS if they're not on payroll. So I think the opposition is trying to get the government to realize that there's some other circumstances that have to be taken into account. What if your operating expenses have increased and won't directly affect the next 2 months, but will stain the account later in the season? Operating expenses have increased. Okay, so I guess you're saying, like, what if things get worse later? So, I mean, if you're anticipating that and you're projecting that out now, I would probably apply for that CEBA account if you meet the other criteria in terms of the payroll. You have to sort of base it on what you expect to happen, I guess, in the future. Okay, so that's, I think, what I'm seeing here for questions. Maybe I'll let Jesse cover off the next section here.
Okay, so very, very quickly, as we are 15 minutes over already. So the tax deadlines, most of people would know by now, but anything due after March 18th, you can now wait until September 1st, 2020 to make the actual payment. Corporate tax returns due after March 18th, 2020, and before June 1st are now June 1st. So this would be your, I guess, November and October year ends. You're going to push to June 1st. And your HST payments, they just announced again too that your remittances that are owing after March 27th, you can wait until, and before June 2020, you can wait until June 30th, 2020. Still file the return. No penalties will be charged if you, for late filing. So just get them in, but you can wait to pay until the end of June. Individuals, the deadline has been moved from April 30th for anybody that's not self-employed to June 1st. If you're self-employed, you've always been able to file up until June 15th. But again, your payments were always due April 30th. They're now due September 1st. That also applies to your installment payments that would have been due in, I believe, June 15th would have been the next installment period to pay. You can wait until September 1st to pay that. Charity returns, they're normally due between March 18th, 2020 and December 31st, 2020. You've got all the way until the end of December 31st, 2020 to file. There's no deferral on payroll taxes, so it's important to take advantage of the wage subsidy program. So the provincial other reliefs, the EHT, there is going to be temporary relief. So there's going to be an exemption limit raised from $490 to $1 million until the end of the year. This we calculated approximately about $9,900 benefit for people available to do that. And penalties will not apply if missed remittances from April 1st to August. And the WSIB deferrals, again with no interest. Check with your municipality regarding property tax and business deferrals. So one kind of tax planning thing, and it comes back to reorgs and estate freezes. If you are in the middle of one or if you are contemplating one, chances are your value of your company may be at a low right now. So that might either be a good thing or a bad thing, depending on what you want from an estate freeze. Adding shareholders to the company, when you add family members, you're supposed to be transacting at fair market value. So if the value of your company is down, it might be a good time to do that. Or conversely, if it may not be a good time because you're not going to realize the full value of your company right now. Be careful realizing your capital losses, because you cannot sell something and then rebuy it just to trigger the loss right now to offset other income. So be careful with that. And again, you should be looking at your remuneration strategy with your accountant to make sure that you are taking advantage of all the options that are out there and best. And then the prescribed rate loans. So they've announced that they're not going to change it for quarter 2 of the year, but they're expecting to decrease the prescribed rate for Q3. I don't know for sure that's going to happen, but if it does, this is for people who are trying to split income with their spouse. Something you can talk to your accountant for. Prescribed rate loans will go down to likely 1% as of next quarter. We already went on the code. Then this is the link. If you go to our bakertilly.ca website or just Google Baker Tilly and COVID, you're going to find our landing page, which has a number of links, releases, and our document that Laura had referred to. It's a nice chart, kind of summarizes everything that we've talked about and the different plans. And again, it gets updated all the time. The other thing you can do is subscribe. So if you can go to one of their, for our office, it's Baker Tilly, Durham, Cobourg, or the Kawarthas, and you can subscribe to our blast. So every time something changes, it comes out, we typically send out a blast to keep you up to date. And again, this is just a disclaimer, making sure everybody understands that everything's changing, everything's moving so quickly. We're trying to do our best we can, but be careful. Thank you.
Yes, thank you so much, Jesse. Thank you, Laura. There is one question here I just want to just touch on because it is a good one. Can the CEWS be used to pay for contractors? Sorry, let's repeat that again. Can the CEWS be used to pay for subcontractors?
No.
Okay.
So subcontractor's not going to get reported on the T4, so it's not going to be employment income. You could technically switch them to being an employee, but again, CRA is not a huge fan of flip-flopping between self-employed and employees. So I caution, if you're going to do that, you're going to stick with it forever going forward and make sure that they meet the employee tests. And again, if it's a related subcontractor, then you're limited to 75% of the pre-crisis amounts.
Okay. And so just so everybody knows, all the links that Jesse and Laura have shared will be available. I'll also make sure that you have access to signing up and joining their newsletter. Again, both of you, Jesse, Laura, thank you again for giving so much of your time and energy, not just to this portion of the webinar, but all the work that went into getting us up to this point. Thank you, everybody, for all the amazing questions that you had throughout. Again, I'm Kyle from Bryson Insurance, and Baker Tilly is an amazing company in our community doing great work. Thank you for doing this as a piece to give people some peace of mind or direction to help through in this very troubling and challenging time for businesses and families. And with that, we will complete this. You will receive a recording, the slide deck, everything, as soon as we have it all available for you. So take care. Have a nice weekend. Happy Easter, and be well. Thank you.
Stay safe.